Hey everyone, welcome to our Wednesday workshop with NuView. Welcome friends and family for joining us. Today we will be talking about mining REIAs for more money, borrowers, deals, and investment opportunities. What a cool title, but that really does sum up what a REIA is all about. So I'm pretty excited about our guest host, and I'll give you some more details on him in just a minute. Before we get started, for those newbies here, what is a self-directed IRA? So a self-directed IRA is a vehicle, an IRA like any other IRA. The only difference is that you can invest in alternative assets with it. And there's different types of IRAs. I'm gonna cover a couple of the different IRAs that you can use, but it is self-direction. You get to choose your own investments. Typically, they're alternative type of investments, things that you can't just go to a brokerage or the stock market to buy. These are other types of investments. All right, so the benefit of using a self-directed IRA is not only are you diversifying your retirement portfolio, you're also saving on taxes. Whether it's a traditional IRA or Roth IRA, it has an advantage. So for example, a traditional IRA is going to be tax deferred. A Roth IRA, it's going to be tax free. So it really depends on what your strategy is. And not only that, you can invest in things that you understand, things that are like brick and mortar, like real estate. You can do private lending where it's secured by a piece of real estate. There's a big variety of alternative assets out there. And it's things that you can understand, because we all know that the stock market, it's uncontrollable, it's volatile. It's not something you have control over or anyone else does. And you can try to predict it and follow people that think they can predict it, but you really can't. So a few things. These are the types of plans that you can hold in a self-directed IRA. That's going to be tax-free or tax-deferred. Like I mentioned, your personal plans, you have a Roth IRA. Roth is going to be tax-free. What does that mean? You're going to pay the taxes on the contributions you make to the plan. And then going forward, it's going to grow tax-free for you. Then you have your traditional IRA. The difference is traditional IRA is tax-deferred. So any contributions you make to a traditional IRA, it's going to be tax deductible, and then going forward, it's tax deferred as it grows. So that means once you reach that age of retirement, you start taking those distributions, that's when you start paying taxes on those profits that you made, those dividends, all the growth in that account. And it's based on whatever your tax bracket is at the time you take the distribution. Then you have your employer plans. If you're self-employed, you might consider a solo 401k. This applies only if you have no employees, or a SEP IRA. SEP IRA is great if you have a small business as well. There is an employer match included in the SEP IRA. And then you also have a simple IRA, also great for small businesses. There are some differences. I'm gonna highlight a couple of those. In a solo 401k, if you use a solo 401k, it has higher contributions than a traditional or Roth IRA. A solo 401k, you can contribute as of 2022, up to $61,000 if you are under the age of 50. If you're over the age of 50, there's an additional $6,500 in catch-up contributions. So that's a large amount of money that you can contribute to that plan. Gives you more buying power and more opportunity to grow that retirement account quickly, especially if you're a high earner. You can put more money away, and then you can make some of these alternative type of investments. Then you have your SEP IRA. So a SEP IRA does have a mandatory employer match. So if you max it out, it's up to 25% of whatever your self-employed earned income is. Maximum is $58,000 you can contribute to a SEP IRA. And if you have employees, whatever the percentage you contributed to your SEP IRA, you do have to match that same percentage on your employees' IRA if they have a SEP IRA as well. Now, there are specific limitations. They have to be full-time. They have to reach the eligibility requirements in order to be eligible for the SEP IRA as a plan participant. And then you have a simple IRA. Simple IRA only has a 3% employer mandatory match. You can contribute up to $13,000 to that plan. It's great for small businesses, 1 to maybe 5 employees. It makes sense. And you can also use this to diversify into alternative assets like any of the other IRAs. Then you have some other plans that most people don't know that they can self-direct. These are called specialty plans. You have your health savings account. And yes, I did say health savings account. Most people don't know that that money can be invested. So you can use that money instead of paying your medical expenses and make investment into alternative assets. Whether you want to put in a brokerage account, you want to put it in cryptocurrencies, whatever you want to do, or you can even partner it with any of these other IRAs that you have if you needed some extra funds to be able to invest in a specific deal you're looking at. So that's another option. And then you have your Coverdale Education Savings Account, also called an ESA. So that's great for any kids or grandkids that you want to start saving for college. And same thing, this plan, it can be partnered with any of your other IRAs on any investments that you're looking to make. All right, so these are the most common types of investments that we see clients make, but there are some things you cannot invest in. So I'm gonna start with that. First thing you cannot invest in is life insurance. And then the other thing is collectibles. Those are definitely not allowed. But the things you can invest in, real estate is probably one of the most popular investments we see our clients making. And there's all different types of real estate. You can invest in foreclosures, tax liens, multifamily syndications, apartment buildings, real estate option contracts, condominiums. You can buy land. You can buy offshore real estate. You can also invest in commercial property, storage units, mobile home parks. I mean, the list goes on and on and on. So real estate is one of those things. It's brick and mortar. You can see it, you can touch it, you can feel it. It's easy to understand how the real estate market works. Now, inventory is kind of low right now, so it's tough finding properties, but they're out there and there's a lot of great investment opportunities. Always discuss this with one of your self-directed IRA specialists, so we can cover what the rules are when you're investing in real estate, because there are some rules you want to know. The next thing is called promissory notes. I like notes. It's a very passive type of investment. A lot of clients do invest in notes, whether it's a note fund or it's specific notes to a specific borrower. You get to create the note and you get to negotiate what the terms of the contract look like with that borrower. I like secured notes because they are secured by a piece of real estate. So just like you go to a bank and get a mortgage, and that mortgage is secured by that piece of property, what's the same thing with the secured note? The IRA holds title, typically first lien, but it could be second lien on that property. So if the borrower were not to pay you back, just like a bank would do, you're allowed to foreclose on that property or renegotiate the terms of the note to get it performing again. Or you can do an unsecured note. Unsecured notes, they're not secured by anything. That's the only difference. And they typically have higher interest rates. So you do have a little bit more power when you're negotiating the terms of the note with an unsecured note. But myself, and this is just my opinion, I am not a financial advisor. I'm not giving any financial advice, but I like knowing my investment is secured by something just in case. And then you have private entities. There's lots of companies out there, whether it's something like a brand new company, a pre-IPO, you just want to invest in, I don't know, private bank stock, something like that. These are private entities. You're investing into the company. So you can do it as a limited partnership, joint venture. You can invest in LLCs, trusts, any startup companies. There's a lot of people that do what's called angel investing. That falls under the private entities as well. And then the next thing that's actually starting to get a little more popular and more people are looking into is called cryptocurrency. Everybody's heard about it. There's commercials out there, but you can use an IRA to invest in cryptocurrency. And the one thing I hear from most people that are doing this is they wish they would have known they could have bought cryptocurrency years ago, because now what's happening is they're being subject to the capital gains taxes because of the cryptocurrency market doing what it's doing now. It's growing. So there's more capital gains tax to be paid. But if they would have originally bought that crypto in an IRA, especially a Roth IRA, they wouldn't have had that capital gains tax. So these are some of the most common investments, like I said, that clients do make. So with that being said, I am really happy to introduce you to a friend of mine. His name is Jim Pamplin. He's the co-chair of REIA. REIA is the Dade Real Estate Investor Association. He has some great tips and tricks and why it's good to be part of a local REIA. Hey, Jim, how's it going?
Hey, Brian, very good. And I want to say thank you, Brian, and your buddy Nate. You came down to our REIA meeting in January as sponsors. It added a lot to our meeting. A real estate investor associations is where you meet potential clients for yourself, but as an IRA owner, where you can meet a lot of people. So
yeah, 100%. So how's the weather in Miami, first of all?
Well, it's nice and warm today. I can't complain.
All right. It's nice being close to the beach. It was really cool visiting. Thank you again for having us down there. It was nice to network with some of those Miami folks and teach them a little bit about NuView. I'm going to let you go ahead and take over. Tell us all about REIA and why it's important to be part of a REIA.
Okay, are you seeing my screen okay, Brian?
Perfect.
Okay. Well, Dade Real Estate Investors Association has been around since 1996, and there's lots of investor associations across the nation that popped up earlier and later than that. I've been with them too many years, since 97, but, and it's not my full-time job. We'll go into how REIAs are organized. But basically, a real estate investor association is simply a group of like-minded investors. Let me move my screen here. They have periodic meetings or events for members and guests, and they focus particularly on networking and investor education. For the purposes of an IRA investor, you really need both. You really need the education so that you know, because for example, right now, everyone who is depending on the MLS for deals is about out of luck. The inventory, as Brian mentioned, is extremely tight. So you need education to know what other kind of perennial deals are out there. Real estate is a self-replenishing resource, which means it turns over. There's always something available for you. For those investors who really know how to work the system and understand where the deals are, they could be your customers and they could be your partners. So networking is a real big key. Our club meetings have always been at a bar, and heavens only knows what goes on there when I'm talking, but nonetheless, I do know deals are done. Now, the emphasis of a REIA varies by region, and I used to be a member of the National Real Estate Association, and in like Ohio and Illinois, they're slanted towards commercial and multi-unit or single-family residential homes. In Florida, a lot of them are focused on wholesaling. That is, if you don't know what that is, that's where you buy a property and resell it to another. And when I started wholesaling years and years ago, I couldn't imagine why somebody would buy a property from me. If I could buy it, why couldn't they buy it? But people are busy, and people want to know. My partner at that time had an expertise that was really valuable, and I developed that expertise. So there is a big value in wholesaling to the people who buy the wholesale deals. Now, whether an association focuses on residential or wholesaling, I guarantee you that in any of those associations, there are people doing both. The other good thing about larger associations, and I know the one in Orlando does, is they have subgroups, and they focus on different areas. You might have commercial, you might have vacation rentals, you might have single family and multifamily rentals and wholesaling, or even a mastermind group. Now, some are for profit and some are not for profit. Maybe you didn't know that. Some of them are actually tax exempt. Now, the for-profit owners, like my association, we have to generally have another source of income. This is not my full-time job by any means. I'm an investor, I'm a lender, and I also employ my IRA funds and my solo 401k funds in loans. Now, not-for-profit entities will have perhaps more vibrant education events because they have to generate funds to perpetuate themselves, okay? So for example, they might have subgroups that meet in different areas and subtopics that will attract only a few people, but they can charge for that because there's generally what you would call, an administrator running the club. So they have got to do what? Generate money to make them to pay their salary. Now, regardless of profit or nonprofit, we charge for memberships, different levels for investors and for businesses that serve our entities. This is another really good reason to attend a REIA, because you need to meet people who service our industry. You can't just call any insurance woman or man on the street and say, hey, can you help me out with my vacant property? They'll look at you like you have two heads unless they've had experience in dealing with vacant or wholesale or rehab properties. Okay, so it's really important to meet people who specialize with investors. Now, we, as a for-profit entity, we have speaker sales. We have outside speakers come in who sell products. We have a CPA that we invite in every other year. He's tremendous. He practices in Florida, and New York. There's a lot of people like that, I've learned. And so that's how we make money. We also have proprietary services like coaching programs. And the people who are in any REIA's coaching program keep coming back to the REIA, especially if they're successful. And guess what they have? They have deals. They have needs for partners, and they have needs for money. Two of my coaching students, I getting paid off on one of their loans. I loaned them money from my IRA and from my 401k recently. And I knew the deals because I tried to buy them myself. I was a few dollars short. They bought them. And so it wound up being a great loan for my retirement entities because I knew the properties. I wanted them myself, couldn't get them because I was too cheap, maybe, I don't know, but they're doing great. You need alternate investments. And indeed, the NuView retreat is a great place to find a lot. I had such fun at the NuView retreat. I can't wait till the next one because I met all kinds of people who do some of the things that I do, but who also do what I don't do. And that to me is interesting. And as I grow into closer retirement, I'll be investing, I'll be sort of making my investments a little more diversified. Right now, personally, I stick to owning property and lending because that's my business, is my daytime job. Now, another reason you need to go is you need to understand the area trends. Now, what's going on in Miami is crazy. It's not so crazy in Pensacola. It's not so crazy in Tulsa, Oklahoma. So you have to understand what's going on in the area where you want to invest. Jacksonville is blowing it away. There's risks to that, and you need to be able to understand those risks, and you can only really understand that by having professionals who might speak or who might attend the meetings. In January, when Nate and Brian were there, we had the outgoing chair of the Miami Realtors Association speak. And it was very illuminating about her forecasts, which line up with a lot of national forecasts of what's going to happen in our area. So in your area, it's extremely critical when you're investing your money with a partner or in a loan that you understand. So let me tell you how to identify the players in the club. In other words, the ones who are doing deals. Now, the first thing I'd say is simply ask the club leader, whoever is talking. They may or may not share with you if they're making money out of those people, but they might. But you'll see little gobs of people in the networking hour gathering around people, or you'll see people holding court in the bar. Listen in, introduce yourself, find out what they do. And when they ask you what you do, you say, well, I have money, I'm a passive investor. Their ears will perk up. Trust me, they'll seek you out because they may need lenders or partners. Now, again, because this is my day job, I approach due diligently a little bit different, but due diligence applies, and we'll get into that a little bit later. This is a long-term play, and when I say long-term, for me, long-term is a year. Outside speakers come in and they'll talk about storage. That was a great, the guy at the NuView retreat who talked about storage was just so interesting. Now, if you're a member of a REIA, you will get discounts to events and maybe even materials. So these are all of the reasons to join REIAs. Most REIAs have lawyers as members, and that can help you with due diligence or transactions, okay? Should I seek partners, borrowers, or investment opportunities? The answer is yes, yes, and yes. The key is to network. Now, partners. I can tell you that my business partner and I do different things. It's kind of silly to partner with someone who does the same thing you do because you're stepping on each other's toes. But when you're looking for a partner, you need to be sure that they are doing something that you understand. That's the whole reason you've educated yourself about IRAs, and another reason you've educated yourself about your market. So you must network at the main events or the other events. Now, as Brian mentioned, there's rules about everything, and you need to understand the rules, and that's where NuView comes in, about what you can invest in and what you cannot invest in, but just as important, with whom you can invest, okay? I won't get into it, but obviously you can invest with your daughter or your son, you know, things like that. But there's some more rules of that you really need to understand. Now, when you are partnering or when you're doing a loan, you need a competent attorney with direct experience. You need someone to assist you with your documents, not your your cousin's wife's brother who does workers' comp, okay? You need a lawyer. And in South Florida, we are blessed with just about any discipline that you could need. So, and I really mean a competent attorney. And how do I find attorneys? I guarantee you, I find them by referral and referral only. Another great reason to network. Now, when you are loaning money, the borrowers pay for the documentation for the loan. And when I meet a new attorney who's going to do loans for me, I basically say, look, I want something that you would foreclose after, period. Because in my experience, I had a lot of money invested in the crash, and I wound up with 2 houses in my IRA. Was I upset? Yes, I was upset because the value was, like 40% of what I'd loaned. So what choice did I have but to rent them? Now, all the many years later, I'm more than almost triple my money, so I'm very happy. So you shouldn't be upset with what happens in the cycle of real estate. It goes up and goes down. I'm maybe a lot older than the rest of you, but I've seen it. And so I just started collecting rent. Still a great return on my initial investment. Now, I had to manage the properties. I'm not like our good buddy Greg Bond. I'm not too fond of managing people, but at real estate investment associations, you will meet what? Competent property managers. So you can be totally hands-off. So if you find yourself in a situation where you do own a property through a deed in lieu of foreclosure or an actual foreclosure action, not to worry. If you're earning rent, you're still earning a great return on your investment. Now, I would say don't cut corners anywhere on documentation. The lender package that I have and I use, and most people that attended the NuView retreat who represented loans, it's a full doc package. They want to know everything about the borrower, and every kind of disclaimer or is signed, like no coercion on insurance, all these kind of things. Now, personally, I only lend business to business so that we're not run afoul of any consumer financing laws. That's what I do. And then I get a personal guarantee. Now, be sure your documentation is thorough. And furthermore, be sure before you agree to funding or your broker agrees to funding that the documents are checked and everything is signed. Yes, you'll have an agreement in there that says you agree to come back and correct any errors, but as the borrower, but you still need to be sure that someone on your behalf or you is looking at the signed documents before the funds go out, okay? Now, you need to understand, so let's talk about due diligence, okay? If investing is not your day job and you feel you haven't had enough education, then for heaven's sakes, hire somebody. Pay an attorney, pay a competent real estate broker, pay an appraiser, find somebody who will help you vet your deal. Again, I do some risky things in Miami because I know Miami. I know Fort Lauderdale. And if you know your areas, go for it. There's so many reliable comparables service today other than the MLS. CoreLogic has a bunch of products that can help you assess the current and the future value or after repaired value for any property that you're considering. Now, if you are partnering, no handshakes, period. You really need to document it with a joint venture agreement or whatever your counsel advises. And if you have never done one, hire a lawyer, period. Because it can be the greatest thing on earth as long as everybody's happy. But heaven forbid if your partner should be injured or pass away during the project, you have to have items in your joint venture agreement or your partnership agreement that addresses that, because your IRA could be left holding the bag while someone you don't know is taking over, okay? So it's really important because you are a passive partner. So I think my biggest caution about investors who are not connected with the community is they should go through a broker. But if you want to find your own deals, I'll back up and say attendance at a real estate investors association is about the biggest bargain that you can get. And I assure you, in Florida, there are plenty of it. Even where I am originally from in Oklahoma City, there are plenty of investor associations in Oklahoma, because that is where you will meet the players. Now, management companies you'll find, lawyers you'll find, people who need money you'll find, and you have to be careful. No sob stories. You have to be able to evaluate what they're saying. And then get friendly with the club leaders. Look, I won't lie to you, as a for-profit club, I want to meet people. I want to do deals with them. I don't prohibit anybody else from doing deals with them. And we don't require that you share deals with us if you run into a club. That's how our club got started, actually, years ago. 4 guys and a young lady investor and a lawyer basically were told that they did deals with this REIA, they had to pay the owner a certain percentage. Now that's just rubbish. So, be sure you're dealing with people who treat everyone fairly. Business is business, and I am dealing today with people with whom I dealt 25 and 20 years ago. I mean, I met Glenn Mather in 2004, and I'm still doing business with him through NuView. So you'll find long and profitable associations if you participate, and if you will follow the guidelines of protecting your investment. It's no one else's job to protect your retirement money except yours, okay? NuView is a custodian. They have a lot of wonderful procedures in place that have kept me from making mistakes, and I follow them. I love the way that it's online now. But if I miss something, I get a call or I get an email back. So always do the best you can in protecting yourself, because absent, the procedural things in NuView, there's nobody. So like I said, I've been in clubs for many, many years. I used to attend all the clubs in South Florida. And in fact, we're going to partner with another one for a very important panel discussion about the market. The market in South Florida is different, like I said, than the market in Orlando. So we're trying to educate our people about which direction they should go in and what to be careful of, what asset classes are performing the best. And like I said, once a year, we bring in the head of our Realtors Association, as do many clubs, to talk about what's going on in the marketplace. In South Florida, we have foreign people flowing in. That may not be true in Pensacola, but there are other things going on. I want to say one more thing about inventory, and Brian said it correctly in the beginning. Inventory is tight, but we're doing as many deals in 2022 as we did in 2020, which was a great year for us. And it's because we are looking for deals that we teach people how to find. That's what happens in a real estate investor association, whether they teach it or not. If you just hang around, you have to learn something. So we deal with a lot of probates, we deal with a lot of pre-foreclosures, and yes, there are pre-foreclosures that have no equity, believe it or not. With all the rise in our prices, there are still plenty of people with no equity. There are plenty of sellers with need that do not list their properties, and you can find them. Our public records are more accessible now than ever. So if you're looking for a deal for your IRA, you can even learn how to find them at a local real estate investors association. There's a wonderful woman, I can't think of her name now, out of Orlando, that teaches about tax deeds and tax certificates. Oh my goodness, what a wonderful way to locate property or get passive investments. Again, you will meet these people at REIAs, and your job then is to decide which niche is for you, and very simply apply yourself, apply your due diligence, and protect yourself. And I would also encourage you, go to the next NuView retreat. I learned so much about other investments when I was there. And, Brian or Grace, I'm not sure who's there, that's kind of about all I really had about REIAs. Like I said, It's not my day job, but I've been going to REIAs for 26 years now. And I think it's a really important part of anyone's business.
Yeah, no, I agree 100%. It's a great place to just network with like-minded investors. And whether you're a novice investor, real estate investor, you're just trying to learn. I mean, there's the subgroups and there's workshops and there's guest speakers. And I mean, you're going to learn so much in the REIA. And I think that's the biggest value anyone can get. And once you figure out how to do that and do some of these investments with your own cash, well, then you can evolve and start doing it in retirement accounts and learning about the tax shelters and the tax savings and 1031 exchanges and all the cool things that come along with it, and really start building your wealth that way. But I mean, I've been going to REIAs for the past 5 years, and I know myself, you know, even though I'm there representing NuView, I'm always taking notes. I mean, that's one of the biggest perks of the job, is I get to learn from all these cool, you know, guest speakers and investors on the things that they're doing, how they got started.
I think that's right. And again, there are people like NuView, many vendors who are there that you can learn from, and also who can be a resource for you. Even as an IRA investor, you may need to recommend to your partner or your borrower whom to call, okay, about something they need, insurance, title, closing, whatever. You can't be the expert, but it is your money, and so you need to have a say.
Yeah, exactly. And it's a great just resources, period. You know, everyone knows everyone, and some people are there looking for deals. Some people are there looking to borrow money. Some people are there, you know, just to learn. But the thing is that all these people, if they just learn how they can work together and collaborate, I mean, they're unstoppable. I know there's a couple REIAs I've been to, and it's just like everyone always works together on the projects, and then everybody's successful and everyone's growing. And, you know, it's just the power of networking, really. So I know with, you know, the pandemic and everything, Jim, you know, things kind of dropped off and everything was virtual, and now things are going live again, correct?
Everything's going live again, especially the courts. And I can tell you that I'm seeing foreclosure cases now, because I read court files every day, where they say no payment since January of 2020, no payment since January of 2020. And that's going on now. And the banks are catching up, and they are foreclosing. So that means there are deals out there for investors. And I won't, you know, elaborate on the ways to do them, but if you read, you will find them. And in Broward, it started first in Miami-Dade County. Now Broward County is really ramping up. And several of my students have mailing campaigns, they have call campaigns, and we're getting deals. We're getting deals. And I'm making a loan today to some guys I've loaned to before, and they found an off-market deal in a really good part of Miami. And even on conservative terms, I'm happy to lend them what they're paying for it. And again, I've worked with them before. I know the area. And but they came to the club. They met me at the club, and they sought me out, not just because I was a club leader, but because they knew I had some money in my retirement account. So that's the benefit of going. And I'm looking forward to making them happy. And I'm looking forward to putting those checks in.
Yeah, no, I hear that. So can you give us an example of maybe some of the people in your network of REIA and how they've collaborated and used their IRAs?
Well, I can tell you this, it's mostly through lending, but I have a guy who develops property, right? And he has worked with guys with their IRAs for mezzanine funding, intermediary funding, before they get their loan from the bank for the construction. Now that's specialized knowledge, and the guy who has the retirement account used to be a builder. Okay, so that's pretty simple. But there are others who, like we have a property manager, right? He has probably 400 units under his belt. So some of his partners for his own property are people's IRAs and their solo 401k. Yeah. So not only does he manage properties for others, but when he finds a good deal, which anybody in the investment business should do, he has developed a network of people with retirement money. There's one lady, she's consistently helping him in, as I do, in the IRA. I have a loan with him too. So that's pretty much how it works. My exposure was only, is mostly lending. Now, there are IRA holders in my association who wound up like me in 2008 and 2009, having to take property back. And I would say by and large, most of them did well. I managed my own properties, but those that used property managers did really well. And I would say to people, don't worry too much about foreclosures, especially in Florida. They're going to happen. It's just a part of business. But don't be afraid, because if you've done your loan right, your rate of return is going to be your rate of return, whether you're renting or collecting interest payments. That's my opinion.
Yeah. I mean, not only is there private lending, there's also joint ventures that you can do. I mean, the cool thing is if you're the one with the money, you kind of can control a little bit of what the terms look like to an extent. There's a lot of fix and flippers that, REIAs that you can definitely partner with. They're always looking for, hard money lenders typically. But the cool thing, if you're using your IRA and you're not really a hard money lender, it's more reasonable than what the hard money lenders might be charging them. And you have that negotiation power.
Well, it might or might not be, but if they need the money, they need the money. For example, I'll tell you how Viju and I got restarted. You met my partner, Viju Katunkel, right?
Mm-hmm.
So we did our first 6-figure rehab with a gentleman right after the crash, with a gentleman who was using his, don't call me, I'm really sure it was his 401k, okay? Now, we didn't have any money. We didn't have any credit at that time that we wanted to use. Actually, this is before, but we just were new in the business, in the rehabbing business ourselves.
Mm-hmm.
So we did a 50-50 deal with him. Great for him, great for us. I drove a Prius at the time. The only money I had in it was gas, So, and I met him again. I met him through the club. Why did he come to the club? I have no idea. The guy was a bajillionaire.
Yeah.
His business was student loans.
Oh, wow.
Okay. And I'll tell you this, a retired fireman came up to me and my partner after a meeting one time. He was buying rentals. He actually helped us with our lending business. He offered us $1 million for the lending business. So you have no idea who is sitting in that audience.
Yeah.
We're still friends today. He's still building his portfolio, but you have no idea who is in the audience when you go to a REIA. And if you just hold yourself open, opportunities will come.
Yeah, 100%. I agree with that. You never know who you're going to meet. You never know what deals you're going to come across. And it just might be that one deal that's going to, change your trajectory and help you get to where you want to be. And then you can rinse and repeat after that. And you just keep growing and building your network. And then before you know it, you might be the one in the front of the stage, educating other people on how you did it. So yeah, I definitely agree with you on that. Hey, audience out there listening, if you have questions, go ahead and type those in the Q&A section. We're going to go ahead and do our Q&A segment, and I'm sure Bill or myself can help answer those questions for you.
To reach us, visit DREIA.com or DREIA.org. And we're beginning now to have our live events. Our first one was in January. We have online events. Our next events are in April. So watch our calendar for that. And I'm Jim at DREIA.com. Kind of easy to find me, Jim at DREIA.com, but it's DREIA.
Yeah, we have a link right there as well in the chat. If you want to go and select that, you can see their calendar. So when their next event is, I know I will definitely be attending. I can't wait to go down there again. Miami is a great city to visit. And like I said, you meet all kinds of cool people and you'll learn so much down there. It doesn't look like we have any questions right now. So I'm just going to have a few announcements here. So on April 3rd, NuView is having a yard sale, and this is for charity, for Share the Love. So if you have any items that you want to contribute to the yard sale, go ahead and drop them by our office. We are located at 280 South Ronald Reagan Boulevard in Longwood, Florida. And any items, like I said, you donate will be going to Share the Love, which is NuView's wheelchair foundation. So that is one announcement I wanted to mention. Also, if you have any intention of opening an account, like I mentioned, there's quite a variety of a lot of accounts out there. We're running a promotion for March. It's called March Madness. You are getting $50 off your application fee and a $50 credit towards your first transaction. The code is MAD2022, and all you have to do is write that on your application when you get your account opened. If you have any questions, you can always reach out to me or somebody else on my team. And the way to reach us is at IRA specialists, and that is plural. So IRA specialists at NuViewTrust.com. And always follow us on social media. We post all of our content there. You can find us on Facebook and YouTube, Instagram, LinkedIn. Please share that content with your friends and family. They don't know about self-directed IRAs. They can take more control of their investments, things that they understand, tangible investments like real estate or doing private lending. There's so many other things they can do out there, but definitely share our content. It's going to go a long way, especially with the market the way it is right now and its uncertainty. It's volatile. People don't know what they can do and how it's going to affect their money that's been saved up, their hard-earned money. They could lose it in a day, if things just go downhill. And that's the thing about the stock market. You have no control over it versus a self-directed IRA. You have more control over. Let me just double check one more time if there are any questions. I don't see any questions here. Well, Jim, I appreciate you joining us. Thanks, audience, for joining us as well. Have a wonderful rest of your day. And we will be seeing you again next week, Wednesday at 1 p.m.